Most traders don't fail because they're stupid. They fail because their trading plan lives in their head, not on paper. By the end of this video, you'll understand the one-page trading plan that separates emotional traders from the top 1%. And once you see it, you won't be able to trade the same way again. Part 1. Introduction. Why most traders fail. Let me tell you something uncomfortable. Most traders don't actually have a trading system. They have ideas. They have opinions. They have random rules they break when emotions show up. In the beginning, trading feels exciting. You add RSI, then MACD, then Fibonacci, then maybe Ichimoku, moving averages, YouTube strategies. And somehow, the charts get messier, but your results don't get better. You take a loss, then another. Then one trade wipes out 3 good ones. Now you're confused. Now you're angry. Now you're revenge trading. And here's the real problem. You don't know why you're losing. Because without a system, every loss feels personal. The market feels chaotic. But the truth is, you are. Top traders don't trade chaos. They trade structure. And that structure fits on one page. Part 2. Element 1. Price trend. The foundation. Everything starts with trend. Before entries, before indicators, before setups. Ask yourself one question. Is the market flowing up, down, or sideways? Think of price like a river. If the river is flowing downstream, swimming against it doesn't make you brave, it makes you exhausted. An uptrend is higher highs and higher lows. A downtrend is lower highs and lower lows. Sideways is indecision, chop, traps, noise. Now here's where most traders mess up. They slap RSI on a chart and sell because it's overbought in a strong uptrend. They see MACD cross down and short without realizing price is still above key moving averages. Indicators don't fail you, context does. Fibonacci doesn't matter unless you know the trend. Ichimoku means nothing if you don't know where price is relative to structure. Moving averages are useless if you don't understand why price respects them. Your one-page plan starts with this rule. I only trade in the direction of the dominant trend. That single line eliminates half of bad trades instantly. Part 3. Element 3. Entry, stop loss, take profit. This is where trading gets emotional. Entries feel exciting, stop losses feel painful, take profits feel tempting to move. Most traders enter based on hope, place stop loss based on fear, and take profit based on greed. That's not a system, that's a casino. Top traders define this before the trade. Where do I enter and why? Where is my stop and why is that level invalidation? Where is my take profit and why is it realistic? For example, entry at structure support in an uptrend, stop below the swing low, not random pips, take profit at the next liquidity area or resistance. Simple, boring, effective. The pain doesn't come from losses, it comes from breaking your own rules. You move your stop just a little, you close early just in case, then price does exactly what you planned without you. A one-page trading plan removes decision-making during the trade, because execution should be mechanical, not emotional. Part 4. Element 3. Probability and edge. Here's the hardest truth to accept. A good system still loses. Top traders think in probabilities, not predictions. You don't need a high win rate, you need a positive expectancy. A system that wins 40% of the time can be wildly profitable if the winners are bigger than the losers. This is why backtesting matters, not to feel confident, but to understand distribution. How many losses in a row are normal? What's the average drawdown? What does a losing streak look like? Without this, every loss feels like failure. With it, losses feel expected. Forward testing builds trust, not excitement, trust. Your one-page plan should clearly state my edge, my risk per trade, my expected outcomes. Because trading is not about being right, it's about letting probability work over time. Part 5. Discipline and consistency. This is where most traders fail, not strategy. They know what to do, they just don't do it consistently. They skip trades out of fear. They overtrade out of boredom. They size up after wins. They revenge trade after losses. Discipline isn't motivation, it's obedience to your system, even when emotions disagree. Top traders don't feel less emotion, they just don't let emotions vote. Consistency turns a good plan into results. Inconsistency destroys even the best strategy. If you can't follow a simple plan on one page, adding complexity won't save you. Part 6. Trading as a journey of maturity. At some point, trading stops being about money. It becomes about patience, acceptance, maturity. You stop trying to control the market. You stop chasing perfection. You stop needing every trade to win. Losses become data, not trauma. You realize your job isn't to predict, it's to execute. The market doesn't reward intensity, it rewards discipline over time. And that's why the top 1% don't have complicated systems. They have clear rules, written down, followed daily. One page, no excuses. End motivational conclusion. So here's my challenge to you. Not to find a new strategy, not to add another indicator, but to write your one-page trading plan. Trend, entry, risk, probability, rules. And then follow it like your future depends on it, because in trading, it does. Stay patient, stay disciplined, and remember, the market rewards those who respect process over emotion. I'll see you in the next one.